What's up everybody, welcome to Money Management channel. My name is Andrei and today I'm gonna be doing analysis on C3.ai company.
I got the cash in the bag, stadium packed, born a rock star in this life, gonna live it up.
And in today's video, first of all, I will show you where we are on the price chart and how we get there. Then I will continue with the fundamental news that was the driver of this price action. As you can see, it had a quite harsh volatility during recent days, basically from the beginning of this year. And at the end of this video, I will share my thoughts and my technical analysis. And I will show you what should we expect next. So let's start with the price chart. As you can see, this asset had a very harsh price action, as I already mentioned, and it gained from the beginning of this year to this first swing high about 200%, but to its highest point about 235%. And as you can see, it had quite a decent channel with a support range of roughly $28 and with the range of resistance at around $30. But it broke it to the upside just a couple of sessions ago, and then with this recent movement it lost about 40% of its value in a matter of just a couple of sessions. And definitely you have to be very cautious with this type of asset. And let's start with the fundamental news. What was the reason of these harsh movements, and basically what is this company about? Let me show you that you can find the information about this company on the trading view on your bottom right corner, and let me quote it for you. C3.ai Incorporated engages in provision of enterprise artificial intelligence software for digital transformation. It delivers the C3.ai suite for developing, deploying and operating large-scale AI, predictive analytics and Internet of Things applications, in addition to a portfolio of turnkey AI applications. The company was founded by Thomas M. Siebel, Patricia A. and Stephen Maurice Ward on January the 8th, 2009, and is headquartered in Redwood City, California. So it is an AI company, but I have to say that previously they didn't have this AI prefix in their name, and they started to develop AI technologies just several months ago. And let me show you why it had quite harsh sell-off. First of all, let me show you this article, and this article was published 2 days ago, and it says: why are AI stocks AI, GFAI, BBAI and Sound up today? And let me quote you this: artificial intelligence stocks are the talk of Wall Street today. A number of AI companies are enjoyed strong jumps today, one closing as high as 40%. The entire industry has been experiencing tremendous volatility amid talks of regulation hitting the cutting-edge space. And we all know that the main driver of the volatility of AI companies is the ChatGPT and the OpenAI company that made this happen. And let me quote you this, that recently Kerrsdale Capital issued the short sellers report, and right after that C3.ai losing around 38% of its share value over the past 2 days. C3.ai is out to clear its name. On Tuesday, April the 4th, Kerrsdale released a report in which it alleged that the company had serious accounting and disclosure issues. In a letter to C3.ai's auditor Deloitte and Touch LLP, Kerrsdale Chief Investment Officer Sam Ardrani accuses the company of taking advantage of highly aggressive accounting to inflate its income statement metrics in order to meet sell-side analyst estimates for revenue and certain profit metrics, and to conceal significant deterioration in its underlying operations. And if you want to read the entire report, you can find it right here. I will put the link on it in the description below. It is not the longest one. For example, short sellers report from Hindenburg Research on Malin Automotive is much longer than this one. This has just 7 pages in it, and definitely you have to read the entire document in order to stay in line with its main allegations. But let me quote you further. Fortunately for C3.ai, though the company's prepared response to the letter has seemingly regained investor trust. And let me quote you this. The Kerrisdale letter appears to be a highly creative and transparent attempt by a self-acclaimed short seller to short the stock. Publish an inflammatory letter to move the stock price downward, then cover the short and pocket the profits. Without comment of the legality of stock manipulation nor the innuendo replete in the letter, we will note that their allegation that C3.ai's financial disclosures regarding Baker Hodges are somehow incorrect manifests a fundamental misunderstanding of US GAAP accounting practices and principles. And I have to say that this response brings more trust to the company and gives more credibility to the company. That is why it had, right after the short sellers report was published, it gained about 10% of its value. And I have to say that you have to do your own due diligence. Always you have to do your own due diligence in order to decide whether this company is worth your attention or not. And let me show you what should you do on top of the information from the medias. You have to take a look on the fintel.io. Here you can find the information about the short volume ratio, and you can find this information about the institutional investors in this company. On top of that, you can find the information about the insider tradings, and this is really important in my opinion. So as you can see, we have several sales from insiders, and two people, Juho Parkkinen and Richard Levin, consistently sell their shares, at least part of them, and definitely it is not the best sign when two insiders consistently selling the shares of their own company. And one of them is a director, and the second one is chief financial officer. This means if you can see that basically two C executives have this intention to sell their stocks, it is not the good sign for the company. On top of that, let me show you that right now this asset doesn't have a lot of support from retail community. If you take a look on stocktweets.com website, you will not find this ticker symbol on watchers section, most active section and trending section. But in appwisdom.io you can find this ticker symbol on the first place. But you have to remember that we are in a weekend, and we are in the long weekend right now, and that is why this number tomorrow will be completely different, and this might lead to lower support from retail community of this stock, and definitely it might lead to further sell-off. That is why you have to be very cautious. So, and let's continue with the technical analysis, but before we dive deep right here, please subscribe to my channel, hit notification bell and hit the like button. This helps me a lot. So guys, what should we expect from the price action? Definitely, as I already mentioned, we have two ranges that this asset established recently. The first range of support, we basically can mark it like this. It is the lower range of about $20 mark, and the upper range, it depends on how you can connect these two tops, but let's assume that it is around $30 mark. Let's count it on a round number. So, and this range, this channel holds pretty good for the beginning of February, and definitely this channel should be broken. And right now we have 1, 2, 3 touches with the breakout, and this breakout pretty much false breakout. It is a bull trap when this asset broke it to the upside and eventually returned below the range of support. And we have 3 touches with the third breakout, false breakout, and we have 1, 2, 3, 4. We have 5th touch right here, and it didn't break it to the downside. So I have to say that this movement, when we have a bounce from the lower range of support, is quite technical, because it has a decent volume, much higher than it had, for example, previously, but lower than it had during this sell-off. And this means we have a setup, a medium-term setup for this asset, and if you want to enter your position, you can ladder your buys down, and you should put your stop loss slightly below $20 mark, because if it breaks it to the downside, we will see lower, much lower price action, and it will bring a lot of pain on the table. But if this asset will hit higher targets, at least if you ladder your buys down, your average price might be somewhere lower. But In worst case scenario, if this asset will go higher from this very point and you will catch only the first buy, you will have about 31% of upside potential and about 11% of downside potential. This means in worst case scenario, the risk to reward ratio of the short-term long position is 3:1, and depending on your entry price, you might have up to 38% of upside potential and less than 6% of downside potential. This means if you ladder your buys down, your risk to reward ratio becomes even more lucrative. And I think from the technical standpoint, that's it for now. Just be cautious, do your own due diligence, and if you like my video, please hit the like button, subscribe to my channel and hit notification bell. In this case, you won't miss my next video. See you guys and girls next time. Bye.
I got the cash in the bag.